Hello everyone, welcome to the Ichimoku daily analysis for the Euro US dollar FX for Thursday, June the 21st, 2012. Well, a change of trend today, and a candle that's made a lower high and a lower low. Prior to that we had an uptrend in place, a candle that was an indecisive candle, a spinning top type candle, interacted with this zone of support and resistance that I've highlighted in grey. We can see here that it was previously a zone of support that's now turned into a zone of resistance and is very important for this market moving forward. Very large black body candle denotes the sellers making very solid net bearish progress, a lot of downside momentum from the sellers today. They've closed with control of this market and they've been very strongly committed. The sellers were strong enough to take out the very important 125.86 level of support and have taken it out in a bearish way, and there is a strong possibility that the market will test down to 124.55. At the moment the current candle is developing in a bullish manner, but we do need to watch this 125.86 as potentially strong resistance to this market. In terms of the pattern that I highlighted previously, it was some sort of a symmetrical triangle and we had a target up around the 128.57 area. It seems that that grey shaded area was providing too much resistance for the market to trade through, and I doubt that the market will be reaching that target. In terms of the Fibonacci extension, what we're examining is the relationship between the first time frame downtrend that the market is currently in now to the previous time the market was trending down, and here we see that the market has taken out important areas, the 50%, the 61.8%, and is now approaching 100%, and that will be an important level at 125.20 for tomorrow's trading. If we do see some buying coming in, and at the moment it looks like we are seeing buying, that will hold as an area of support, and we could see the market trade substantially through this black body candle. Just bearing in mind, this black body candle is what some candlestick practitioners, and especially Dan Gramser, refer to as a benchmark candle, and they like to use the midway point of these large candles as a reference point for whether there will be continued bullishness or bearishness. So let's see how the market reacts to roughly the midpoint level of that candle. If we do see price rejection back to the downside away from there, we could see the market continue trending down and perhaps even approach the 161.8% level. We do have some solid support just down below there at 124.30 before the market reaches that level, but really if the market does rally, that 50% of the size of the body of that candle will be important. In terms of the Fibonacci retracement of the prior upswing, the market has traded through the 38.2, 50%, 61.8% level, and will be potentially interacting with the 78.6, which is a minor level, but it coincides roughly with that 100% level that we saw on the Fibonacci extension. The 100% of the retracement level is down at 124.41 and should offer as very, very strong support for this market. We can see that there was a lot of price rejection to the upside from this level when the market began this previous upswing, so that will be a solid support level. In terms of Ichimoku, we have a market that's bearish in the all three time frames now. The market's trading below the cloud, so we're bearish in the long-term time frame, trading just below the Kijun Sen, the pink line, so bearish in the medium-term time frame, and trading below the Tenkan Sen, so bearish in the fast-term time frame. It's been some time since the market's been trading below the Tenkan Sen, and that could be significant. We've closed down below there in a very bearish way, a lot of downside momentum, and that could highlight a very important change of sentiment in the market. There is a possibility that we could see the market trading down to the 124.55 area soon, and in a zone extending down to the 124.34 and even down here to the 124.10 level. We should see some strong support coming into the market. We also have a major level down below now at that very important swing low at 122.87. Resistance to the upside, besides the 125.86 level, we have that zone of resistance at the 127.50 roughly, extending down to 126.40. So overall a bearish market. The sellers are in control of this market. They're showing strong commitment to taking this market lower. Close by resistance at 125.86, but support at 124.55 may be tested very soon.